Good morning, everybody. What's going on? Thank you, everybody, for being here. Really appreciate it. Rusty was first. The step bully was second. Back and forth they go. Nas, what's going on? Q Dot, Gonzo. Thank you, everybody, for being here. Well, it's a different world that we live in today than we did last week. It's an absolutely different world. A lot of uncertainty, a lot of things going on. We got the kickoff to earnings season tomorrow. We got CPI. We got AI news. We got chip news. We got Lena here. We got a lot of things. And we got some stocks rebounding that a lot of people wouldn't have thought. But before we get into it, we also have something falling, like a rock being thrown into the ocean. I am not a financial advisor. I am not your financial advisor. Please do your own due diligence. And please remember, this is for entertainment and educational purposes only. And with that being said, it's time for the roll call before we get into all the news that is just, I don't even know what to say at this point with some of these things. Good old Salesforce. People said it couldn't be done. 171. And it's still massively undervalued. My opinion. You got the Reddit 202 hanging out. IBM's trying to get back to 300. Mr. Softy. It's the return of the SaaS right now. On the watch list, SaaS is winning. Now, it's still a giant loser, okay? It is a giant loser. Hollis wants me to go into energy plays. I'm just not smart enough to know which one, Hollis. I'm just not smart enough. You got ServiceNow at 113. Palantir back over 130. And then there was oil flirting with crossing over that 75 threshold. Flirting. Not what we want to say. And I'm going to get into the whole Iran situation, even though I don't want to. Apple moving higher. Netflix up $1.25. Zeta. Woo. This week, I'm going to work out a time to get Nick on. Zeta is doing the thing. 2267. It's a runner into earnings, and I like it. Okay, I like it. Lulu, 120. The Uber, 75. We got Verizon still under 45. ET just got above 20. Big old distribution there. Nike at 44. What's losing? SoFi selling off. Hood selling off. QXO, we need rates. Alphabet, 355. Qualcomm, 186. And then there was NVIDIA, 207. A lot of people getting upset about NVIDIA, but you know what? It's back over 200. Taiwan Semi, 430. Oracle can't seem to find solid ground. It's back at 136. I bought some more Oracle this morning. Meta, 663. I'll take it. It's not where I want to be, but I'll take it. Then there was SpaceX getting back to their initial price, not where they opened, but where they were supposed to open. I have a feeling it's going to go lower. Remember, still more than 90% of the shares are locked up. That can't be good. AMD flirting with 550, Broadcom 391, Tesla's under 400. And then the memory names. Micron 937, SanDisk 1747. It is an interesting time that we live in, ladies and gentlemen. And I'm not sure which way the markets are going to go this week. I can't tell you it's going to go up or down because honestly, I don't have a clue. I don't know. The New wording, and I'm only going to spend 3 minutes on this, okay? I do not want to monopolize the time discussing Iran, Trump, oil. But I want to get it out of the way, and then we're going to go into all the stock stuff. The U.S. is now the guardian of the Strait of Hormuz. I don't know where this ends. I have no idea. Now, this is what's being said. The USA will be, from this point forward, known as the guardian of the Hormuz Strait. But as such, and as a matter of fairness, will be reimbursed at the rate of 20% on all cargoes shipped for any and all costs necessary to do the job of providing safety and security to this very volatile section of the world. The process and formation will begin immediately. In the same post, President Trump announced the U.S. is reinstating what he calls the Iranian blockade, which only stops Iran's ships and Iran's customers, and declared the strait is open and will remain open with or without Iran, with all other countries getting fair and open use. Now, here's the caveat. There's no details. You have something called legal authority right now, and I can tell you this, I don't think I'm not a political scholar. I don't think the U.S. can just do this. Wouldn't make sense. Now, who knows? There's no details, collection mechanism, which vessels pay. This is just ugly. Now, the irony is crazy here because the mid-June ceasefire deal explicitly barred Iran from charging commercial ships transporting in the strait. Now, Iran has reportedly floated $2 million per ship. The U.S. now wants 20% of cargo value. This is ridiculous. I don't know what's going to happen, but we have to keep in mind this is probably not stopping anytime soon. I really was hoping that we would get past this. I think I was wrong, and I admit when I say I'm wrong. I don't think this is going to end anytime soon. And there's confirmation that Sunday strikes hit a submarine and a ship. This is just ongoing. Now, I am surprised oil is not above 75. I do think there's a world where oil goes above 80. We'll see what happens. Luckily, we have a lot of headlines this week, and we're going to stop talking about this unless something comes up that we have to talk about. I don't want to spend any more time on this, except this is getting too drawn out, and I think at this point, it will continue to get drawn out. And I'm not seeing an end in sight. I hope I'm wrong. At this point, I do not see an end in sight. Now, luckily, this is not bleeding over into equities too much. We have the big banks tomorrow. We got the investment houses tomorrow and Wednesday kicking off earnings season. We got CPI. We have a ton of new news. Micron's global wafer deal. They announced $3 billion in strategic investments in the U.S. semiconductor supply chain, which was headlined by $500 million in financing for global wafers, 300 millimeter raw silicon wafer facility in Sherman, Texas. In addition, 10-year supply agreement locking in wafer capacity. 10 years. So let's look at these numbers. You have Micron locking in strategic deals with 16 large companies on their end for 5 years. They just locked in a 10-year agreement for wafer capacity. They're not doing this for the fun of it. I think that a lot of people are wrong. I actually have to say that I'm probably wrong in one aspect. And the more I think about Nvidia, the more I think I'm going to get out of it next year. The more data that I see, I think Nvidia will do well, but the more and more that all these other companies start designing their own chips, I think Chris is going to end up being right on this one. I just don't know to what degree. Now, I do want to ask all of you what you think, but before I get the first poll of the day going so I can data mine everybody in the chat, I think that this is very big news for the AI trade because I think it shows that more investments will be made, more CapEx is going to get spent. And with Nvidia, I've always said I want to be ahead of the curve with exiting or reducing my position. And look, that can change. Right now, I feel like Nvidia's got a good 6 to 8 quarters of solid revenue growth. Past that, I got no idea. But I have a very large position in it. And I think that Broadcom is so undervalued here. I kind of want to diversify it and get even exposure between Nvidia and Broadcom. But that's not going to happen anytime soon. So, Global Wafers Sherman site is currently the only participant in the Chips for America program that produces 300 millimeter raw silicon wafers domestically. They have a $406 million CHIPS Act award. Now, when memory starts financing its raw material supplier and then signing a decade-long deal, it tells me the supply chain is extremely tight. And companies are securing inputs 2 and 3 layers down the stream. I think that there's going to be enough CapEx spent where all these companies do well. But I think there's more evidence that GPUs are not the only game in town. And they're going to do well. I can't help but think that Broadcom is the real undervalued play here. I can't help but thinking that. And we will see what happens. I cannot wait to go through everything with Taiwan Semi. So Taiwan Semi is going to be where we take our P's and Q's from, to be brutally honest. They reported today at 2 a.m., but we do not have a transcript, okay? So they reported Q2 revenue touched $39.63 billion, which exceeded market expectations, driven by demand for chips and AI. So this is right in the middle of their guidance. Q2 revenue climbed 36% year over year, and we do not get the scheduled report or the call until the 16th. But they're not slowing down. And if Taiwan Semi is growing by 36%, I mean, you got to think NVIDIA's growth, AMD's growth, Broadcom's growth is going to be very strong because their margins are better, or at least NVIDIA's margins are better. And NVIDIA is going to backstop everything with buybacks. So I'm hoping that we see a more favorable number on NVIDIA because I do think it's too cheap, but I'm starting to think that the market doesn't care. I think the market's pricing in that they're only going to see increased competition. And I'll tell you this, if NVIDIA does not break out this quarter, this will be the third quarter where they were unable to break out after amazing earnings. That would get me a little nervous. It really would. So we'll see. And then we got Apple. Citigroup, they're bumping Apple's price target to 365, 16% upside. And they expect Apple to keep gaining market share, even with smartphone and PC markets likely declining year over year. The price increases are going to help their margin, and Citi doesn't see Apple Intelligence driving a big upgrade cycle, but they think enhanced Siri capabilities can boost engagement and support services growth. I happen to like Apple here, and I think Apple will continue to do well. I've been an Apple shareholder for a long time, and while they don't have a professional cloud service business, they are a critical key in the ecosystem. I'm not underestimating NVIDIA's buybacks. I think that NVIDIA's buybacks are going to be incredibly strong. It's just, you got to call a spade a spade. NVIDIA has been unable to break out. And they should be a $275 to $300 stock based on the numbers. They're not, though. I mean, this is not a stock over the past year that's really broken out like other stocks, especially with the earnings that they've put up. So, this earnings season is going to be incredibly important. We're going to see how much CapEx is going to be spent. We're going to be able to model out what's happening. And look, are people really buying NVIDIA? We've owned it for quite a while. You need more buyers than sellers for this to break out. So let's have that be the first poll of the day. Are you still buying NVIDIA? So that's what I am going to do for the first poll. And I dislike that I cannot do it on StreamYard. I'm going into the stream right now so we can post it. All right. Are you still buying NVIDIA? Here. The data mining experiment is live. Let's see what the community says. Can all of you see the poll? Because I am just getting a spinny wheel in YouTube right now. PB, thank you very much. Jurassic Park, man. I remember when that movie came out. Crypto golfer, that's hilarious. I'll keep that in mind before you charge for data. I will keep that in mind. I like it. Hilarious. All right, the poll is not moving. Yeah, the poll froze. We're going to redo it. The poll was not moving. Are you buying NVIDIA? Okay, now it should be live. There we go. Now it's going. So now we're off to the races. And while we let that go, this is why I think all of them will do good. Meta boosted its Louisiana AI data center spend over $50 billion. A Meta this morning, they announced that its Hyperion supercluster in Louisiana is expanding to 5 gigawatts of compute, pushing the total investment to $50 billion and making it one of the largest AI infrastructure projects in the world. The escalation on this project, first it started at $10 billion in 24, $27 billion in October when Meta formed the joint venture with Blue Owl. Now it's north of $50 billion. They've grown this by $40 billion. So let's picture this. 3,200 acres. I don't think people can really think about how big 3,200 acres is. That's over 4 times Central Park in New York City. This is crazy. Here's the biggest stat that I want everybody to keep their minds at. This will not be finished, built until 2036. That's 10 years of building, 10 years of buying stuff. And this is just one company. Now, Meta says that it's paying full cost of energy, water, and infrastructure through its agreement with Entergy, or however you pronounce it. So customers aren't footing the bill. Local businesses have received over $1.6 billion in contracts since the groundbreaking, and Meta plans over $1 billion more for local roads, water, and wastewater systems. The local economics, and this is why I'm pro data centers, okay? Now, I know not in my backyard. I get it. I'm with you. I wouldn't want it in my backyard. But here's the reality. This is going to create roughly 7,500 construction jobs and about 1,000 permanent positions once fully operational. Louisiana gave them 20-year sales tax exemption for data centers built before 2029. So when you zoom out, Meta has pledged $600 billion in U.S. infrastructure and jobs over the next 3 years. And this project carries $29 billion in financing led by PIMCO and Blue Owl. I think this is super bullish. And the reason I made that comment about NVIDIA, and let's see where we're at 62% no, 38% yes. We're going to close it out. I don't think NVIDIA is the one ring to rule them all. Are they the top dog? Yes. Are they going to remain the top dog? Probably. But I think the money is going to be spread out amongst more and more companies. Now, I don't know if NVIDIA is going to remain the top dog for 10 years. Nobody does. But right now, it looks like AMD is a beneficiary of NVIDIA not being able to bring enough capacity to market. So when we think about the build with Meta allocating $600 billion plus, this site is over 3,000 acres. It's not going to be fully operational until 2036. What does everybody think that, oh boy, okay, I'm coming back. I'm coming back to NVIDIA in a minute. I'm sorry. I got to do it. Lena, oh my God, I feel like I'm always picking on you. Are you ready for the news? Netflix has greenlit Monopoly reality series, a Monopoly reality series with a $2 million prize. They've run out of ideas. Holy shit. Netflix has officially greenlit a Monopoly reality competition series from Studio Lampert and Hasbro Entertainment. The show is casting now and is set to premiere next year. 12 contestants will compete on a life-size Monopoly town square. The grand prize is $2 million. Oh my God. All right. Contestants start on equal footing, but that won't last long. Players must accumulate everything or lose it all. Every negotiation, decision, and role can shape their path. Bankrupt players are eliminated one by one until one winner remains. Oh my God. How do I sign up? I want to sign up to be a contestant. I need to sign up to become a contestant on this. Netflix, Monopoly, contestant, sign up. Do you have to audition for this? Like, what's going on? How to apply? Oh my God, this is not like bullshit. This is not bullshit. Monopoly series passes go at Netflix. Audition to be on Monopoly. Apply now. Oh my God. Central casting. Let's get it. Here's the link. If you want to play Monopoly in real life, get after it. Register to apply. You have to be 21, available to take part in programming for up to 3 weeks, resident of the U.S., have a passport. I may have a problem with that. You are not employed or engaged, blah, 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 blah. All right. Please upload a 1-minute video telling us about yourself and why you want to be on Monopoly. Wait, it didn't update. You guys see this? Why is it not going to that page? Why can't I share it? Hold on. Oh, there we go. Okay. Look at this. The official application and a 1-minute video. Oh, I'm doing this. I am absolutely doing this. Headshot. All right, this is the new poll. How many of you are actually going to apply? I want to apply. I'm 100% applying. Would you apply to be on the Monopoly show? Oh, we need to see this. It's only 23%, really? Oh, I'm going to apply. I don't know if I'm going to get it, but I'm going to apply. And I guess I'm going to have to start practicing again. We may have to get a Monopoly group so I can start practicing playing. All right, enough of the shenanigans. We'll get back to the show. There's only 22% that would apply. We're going to kill this. But man, this is funny. Man, this is funny. Oh boy. Statistically, by the way, the best property, do you guys know the best properties to own statistically? Hollis, I'm down to play. We'll set up a Monopoly group, Hollis. I actually have it on my phone, ready to go. Statistically, the best properties to own are the orange. Do you want to know why? Because on the map, when you go to jail, okay, and you come out, 6 and 8 are the 2 best combinations on the dice. And strategically, you end up on the orange the most out of the whole game. Statistically. So, little tidbit of information for all of you. The orange are the best properties. It all comes back to craps. That's how you know we got a loyal fan base that follows the channel. It all comes back to craps. 6 and 8. There we go. Because you know what's number 7, I believe? Community chest, if I remember correctly. Ah, love it, love it, love it. Love it, love it, love it. All right. Monopoly coming to a Netflix stream near you. Oh my God. I guess they don't want to go with Netflix after dark and they're going to go with Monopoly. Man. Oh, here's the other one. You ready? Don't buy hotels. Do not buy hotels, because if you buy hotels, you give back the houses. You want to hoard the houses and do not put them in the bank, because to get to hotels, you have to buy houses. And if you hoard the houses, nobody else can build. Those are the only two tricks I'm going to give you. I got to keep the other tricks in the back pocket. But buy orange and only buy houses. Hoard the houses, never upgrade to hotels, screw everybody over. Anyway, those are the tips if you want to take Monopoly seriously. This is true. Listen, growing up before the internet, play board games, play cards. I mean, shit. I've been playing gin rummy for a very long time. You don't want to play gin rummy with me. I promise you that. People actually, I don't know if you guys have ever played May I. People get mad at me because I'll get pissed at people throwing the wrong cards. It's like, how are you not remembering this person's going for mid-straight of clubs? How? You see what they pick up, you see what they discard. I memorize everything people pick up and discard. Anyway, let's get back to AI and Netflix. Lena, are you here, by the way? I need to know that you're here. Otherwise, that whole segment will have been for nothing. I know that you were here earlier. I feel like you may be working. So let's get back to AI. This is incredibly bullish. What Meta is doing is incredibly bullish. And I think that this fuels a much bigger trade for many years. All right, Lena, I'm expecting you to apply for Monopoly. I'm expecting you to apply. Now, I have not gone down the photonics. I have not gone down any of these roads. But I will tell you this. Oracle is in a situation where everybody is leaving this company for dead. And I think that they're going to be one of the biggest beneficiaries of this. Zuckerberg is not building until 2036 for no reason. He's just not. You know, I refuse to believe that that's what's happening. I want to bring up the deck from Oracle that they just put out. And I want to show everybody something. And then we're going to get into some broad numbers and why I'm buying Oracle. All right. They're adding close to 1 gigawatt next year of data centers. Look at how big this is. Albine, Texas. Shackleford, Texas. Construction. Donna Ana, New Mexico. Saline, Michigan. I mean, this company is getting after it. Port Washington, Wisconsin. Oracle's getting after it. Now, they have a tremendous amount of RPO. And we're going to get into the inflection point that's happening right now, because there is an inflection point happening with Oracle, whether people want to agree with it or not. I'm just going to share it as a window because I'm not sure. I'm going to stop sharing as an individual thing. We go into the financials for Oracle. We go into the cash flow, operating cash flow and CapEx. We do it on a TTM basis. There's an inflection point happening right here. We know Oracle is going to have heavy CapEx the next couple of years. We know that. But on the year-over-year basis, okay, operating cash flow on the TTM was $23.5 billion in Q3, $32 billion in Q4. Grew by $8.5 billion. CapEx the increased spending, $7.4 billion. So on a 3-month basis, year over year on the TTM, their CapEx grew, their cash from operations grew by an additional $1.1 billion compared to how much was spent on CapEx. That's the inflection point I'm looking for. Look, everybody hates Oracle's valuation. Obviously, single digit forward. People hate this, okay? People hate the CapEx they're spending. Nobody believes this story. If Meta is building out to 2036, why would we think it's not smart for Oracle to build? This is an inflection point. It is an absolute inflection point. And this may take 3 or 4 years to come true. It may. It absolutely may. But when we look at where Oracle is in the grand scheme of things, which is due to the data center companies, Meta, Google, Microsoft, Amazon, Oracle. On a forward basis, and I can't type. All right, that's much better. I mean, you guys can see this. It's not even close on the valuation. Based on the expectations of earnings, Oracle trades at 17 times this year's earnings. Everybody else, 20 to 30. It trades at 8.8 times forward, when everybody else is 14, 16, 19, 20. They also have double the EPS expected growth out of everybody. I mean, Oracle is a beaten-up name that nobody likes, which is one of the reasons I'm excited about it. Now, Oracle was late to the cloud game. People don't like the balance sheet. There's a lot of risk. Do not get me wrong. There's a lot of risk. But that's why there's also a lot of reward also. And I don't think it's going to matter that they were late. I think that we need so much more compute that they will be a very large winner. Hollis, you let me know. You let me know. I'm just going to tell them I'm the leader of the milk gang. Let me in. That's all I'm going to say. Oracle is the one that has a shaky balance sheet. But if we can't believe in Oracle, I don't know what we can believe in. This is not Allbirds going from a shoe company to a GPU company. This is Oracle, okay? This is Oracle. They're a proven leader. They're going to figure it out. And I do believe when I run the numbers that they can service the debt for the next couple of years, no problem. And I think that I think my model's correct about their CapEx and their cash from operations. And we look back in a couple of years, I think that we're going to really wish we got in. So we're going to cut over. It looks like this is a very interesting conversation that's going on. All right, I'm just getting it to the right point. All right, boom. I happen to like the cast today. I happen to like the cast.
Nice move they've had, money coming out of semis. It's found a place in a lot of the mega caps, right? Meta had this massive move last week. It's down a little bit today. Put NVIDIA in a separate category. It's not, thought of as the hyperscaler. The hyperscalers are spending on NVIDIA. Amazon's green. Microsoft is green. What do you think?
I'm gonna bring together two thoughts that we had last week, Scott. One is a lot of these mega cap tech stocks are frankly trading at value territory. I could look at Meta, I could look at Microsoft as two examples of that. And I think this is a time that you have to stay true to your knitting. That's the second thought. These rotations, and Joe, you've been all over them for weeks and weeks. These rotations have been coming fast and furious, from semis to software, from large cap to small cap, from the market cap weighted ETFs to the equally weighted ETFs. Pick your style of investing and stick with it. And I do think this is a time when many styles can work. So somebody who's more, I'm going to say price aware as opposed to price sensitive like myself, I can find plenty of bargains out there. And the thing that I have to do, though, is I have to hold them through whatever the volatility is that on a day-to-day basis comes up in terms of the rotation. So if, just as an example, I bought Micron over the past 3 weeks, and today I'm not looking right at this second, but it was down about 5% earlier this morning. I'm not thinking of getting out of that. I'm not paying too much attention to today's downturn. We got Taiwan Semi coming up in terms of earnings at the end of the week. That'll be the first look at near-term earnings for the semi space, and I think Micron's going to do fine over the intermediate to long term. My style of investing is not to get too wrapped up in day-to-day rotation.
Oh no, you put your face right in the middle of the volatility on that one. You know what I'm saying?
Kind of. You ever know me to shy away?
No.
Yeah.
No.
It's what endears me to you, I think.
But really, rather than just sort of taking a back.
So for all the reasons I'm going to come back to, because they talk about Meta next, for all the reasons that Farmer Jim just said, are the reasons I like Oracle. Now I'm going to reload the screen just so everybody know. You know what? We'll change the stock and we'll come back to it. We'll go Microsoft first. 560 is where the analysts see it. Oracle, 263. The low end of the estimates is 190. 190, 12 months out. The analyst community, nobody has a sell rating on it. I mean, let's call a spade a spade. Is Oracle going to go out of business? I would say the probability is no. Is it going to be volatile? Absolutely. Could it go under 100? Absolutely. But is Oracle going out of business? I don't think so. They're one of the only games in town for compute. And we need so much more compute. If you have 3 to 5 years, Oracle could be the best bang for the buck in that entire trade. It could be. It may not be, but it could be. It's just, for me, it's a game of, can the EBITDA sustain the interest payments until the cash from operations expands over the next 2 to 3 years and they can start really reducing their debt load? I think they can. I think they can. How is Mikey's? Who is the biggest scammer and creep alive? Larry Ellison? How's Larry Ellison a scammer? I mean, I don't know the guy, but I would argue that Larry Ellison is one of the greatest entrepreneurs we've ever seen. As a retired Oracle employee at 26 years, I can tell you Oracle's not going out of business. With all the stock you own in Oracle from all those annual bonuses, I bet you're really hoping that they don't. But I agree with you. I don't think they're going out of business. It's Oracle. And look, I don't care. All right, look, I bet you love Peter Thiel also. Look, read my lips. I don't care about anybody's political affiliation. I don't give a fuck. If they support Trump, they don't support Trump, it's none of my business. I don't care. You could support Minnie Mouse to run for president. Okay, we're adults. We have to make investing decisions. Do I care about people's political beliefs? No. Not at all. I care about making money. And I care about what can make me money in the future. And you know what? Not in writing off an investment because the chairman of the board is buddy-buddy with a president you don't like is closed-minded and childish. Period. I don't have to agree with politics. I don't have to agree with any of that stuff. The question is, can it make me money? Yes or no? I'm here to make money in the market. I'm not here to not make an investment because of somebody's political beliefs. I don't give a fuck. Period. I mean, and this is the problem with the Trump accounts. I despise that he put his name on this because it's comments like that and it is thinking like that that is going to make it where people do not invest in these accounts. It's going to make where people don't donate to these accounts. And it's going to make it where companies who happen to vote the other way, which is completely fine, and it's their right as an American to have their own opinion and think for themselves, it's going to make them not want to donate shares to their company. So I hate that he put Trump accounts on it. Should have been American accounts, but what do I know? Anyway. That's all it is. I don't care about political affiliation. I care about making money. And the reality is that there is such a long tailwind of investment in infrastructure because of the RPO stacked on the books. Oracle looks like a credible investment at these levels. I mean, I don't know. Are we really going to sit here and say because a CEO or a board or a founder is friends with a president that you didn't vote for, that you're not going to invest in their company? That's childish. It's absolutely childish. So, I don't know. I think it's disgusting, and I think it's very closed-minded when you start thinking like that. Look, I don't care who you vote for. Everybody is an adult and should think for themselves and have their own beliefs. And I think there's too much party lines both ways. And you get into a very... I don't want to really go down this road, but you get into a very dangerous situation when it becomes an echo chamber. And everybody should just think for themselves. That's all there is to it. So I'm going to get off of this. Anyway, let's go back to CNBC. Let's see what they're going to say about Meta, and we'll go from there.
Seat and saying, this thing's gotten a little too volatile.
Yeah.
The willingness, if not ability, to sort of double down on your position, which I think you basically did.
I did.
Even in the face of that volatility, is noteworthy.
Well, and also fundamental investors. So one of the things I've said to you, Scott, I've said to our viewers is I think it's important that pretty soon there's going to be an anniversary of the CHIPS Act, after which Micron can start to return capital to shareholders. I like that. That's something that I look for in companies that I own. So that sort of fundamental bait, if you will, has me nibbling at it, although now it's about a 3% position, so it's more than a nibble. I do think that, look, if you're a momentum investor, Joe, you're fabulous at it, fine. There are opportunities here, and what you've done with Apple has been nothing short of genius.
Don't patronize it, but go ahead.
What?
I said don't patronize it, just go ahead.
Two of my friends.
Go ahead.
I'll tell them when I think he's wrong.
Go ahead.
No, but I'm going to go back to what I said. Stick to your style of investing. If you're a fundamental investor, if you're price aware, maybe a GARP investor, a value investor, there's plenty of opportunities out there. I'm looking at Stephanie, your Meta. I mean, how could I not be looking at your Meta?
You should be looking at her for the NVIDIA, which is the newest buy, which was the move that was so noteworthy right last week.
Yeah.
For us.
Yeah, because I've never owned it before.
Yeah.
So, and I just think the valuation has gotten so attractive at 18 times forward estimates. And the company is going to grow revenues something like 80% and mid-70s gross margins. Free cash flow is going to double. So I'm looking for opportunities where I have positions and I have more conviction because the valuations have come down, to your point, Jimmy. I added to Amazon too. The one I'm not adding to is Meta because it's a bit frustrating, but I'm not going to sell out of it completely. I do recognize it's very cheap, but they have to show better monetization for that stock to really take off. And I think they eventually will, Scott, but that's a timing kind of thing. I think there's more upside in Amazon. I think there is more upside in NVIDIA. And I have a lot of other technology stocks that I like too.
What was the NVIDIA stat that the valuation was like the cheapest it's been in 7 years?
2019.
It was like 7 years or something like that, right?
Yeah. I mean, and this is a company that has 97% of the GPU market. Okay, fine, they're getting more competition, but that's not going to go to below 90. And I think this company has proprietary software that actually also is really hard to replicate as well. So I think there's a lot of ways you can win with this one. And I just think it's really out of favor right now. And that is very interesting to me. I know the chart looks horrible, but it's really interesting to me that it's kind of found its footing around these levels.
It has. It's up 3.5% month to date. And it still is, to your point, 12% off of its that's 52-week high. It speaks to this thing's kind of gone nowhere.
Yes.
But it's had a nice little pickup with the other mega caps.
So it's actually, if you're looking at it, just predicated solely on price. We understand the strong fundamentals about the company, but now you have what's known as a return to accumulation. And you're seeing that after sitting sideways for a multi-month period. And the beginnings of the return to accumulation are unfolding. I still think that Apple has the capability to be the all-star in 2026. And one of the reasons is, Scott, if we could show it again from last week, we showed that analyst chart, just how low the expectations are and the 12-month average price target.
Why are you asking me if we could show it again?
The 12-month price target for Apple
ask
today.
Our fabulous production team in the control room.
Thank you for doing so.
Can we show that again, please?
So we are sitting at now $320 for a 12-month price target for Apple, relative to all the generous price targets that we see for the Amazon.
302 for NVIDIA. 302. Oof. I will be a happy camper if that plays out. Look at Meta, 820. What did I say? Meta's more an 850 stock.
The NVIDIA, the Alphabet, and only a 61% buy rating. So the analyst community has this embedded skepticism, which is remarkable to me, about Apple and their ability to actually embrace and execute on some form of tangible AI
I think they're
strategy.
torn on the growth rate relative to now what is a more expensive valuation.
Right.
Yes.
It's a P to growth rate for Apple. We've had for the last many years. And what does Apple do? They'll come back and buy shares, or they'll innovate. Now they're raising prices, right? The negative on Apple was how much of can you keep on raising prices? Well, now they just said we're going to raise prices. We're going to see what the elasticity of that is. But to your point also, the same thing with NVIDIA and Apple. It's having the same story. People don't believe that they're going to keep on growing. And to Stephanie's point, it is now shrunk to a PE level that we will see now. What are they going to do in terms of execution of earnings? Because the PE will shrink even more if earnings keep on going higher, kind of like what happened to the semiconductor memory stocks.
Right.
The difference between an NVIDIA and an Apple and memory stocks is you get to reinvest into R&D, which is your forward-looking, right? The memory stocks, as we know, and Jim and I are very familiar with cyclical stocks, and you look at commodities, whether it's a Freeport or a Micron, we know the supply is not catching up, right? I mean, it's just that's the story.
I do think we have to address the news from late Friday, the OpenAI lawsuit. And because there's two ways to look at it. And the first is one that I don't agree with.
All right. So before we get into the OpenAI lawsuit, I have that on the docket. Before we get into that, let's addicted to trading. I can't believe you just said that in the chat. I can't believe you just said that. Anyway, when I think about what they're saying, they're kind of down the same path as me. And if I exclude ETFs and mutual funds, my largest holdings are the Mag 7. Outside the Mag 7, SoFi and Palantir. But the CapEx is not stopping. I think NVIDIA will do well. I think other companies will do well also. I think Broadcom is going to do it. Addicted to trading, I know. You said it. I'm just saying. Anyway, when I look at the downstream effects of who can spend the money, well, it's Amazon, Alphabet, Meta, Microsoft, and Oracle, they're the ones that can actually spend the money. And then we look at OpenAI, we look at Anthropic, they're the ones that can buy the compute. There's other companies that can buy the compute also. And this isn't an argument about are LLMs going to become commoditized, et cetera, et cetera. This is more, how are we going to make money in the market? Where's the money going to? You follow the money. Well, these companies are spending on RPO. RPO is contracted revenue on backlog. We know the revenue would be higher if they could stand up data centers quick enough. And in order for Amazon, Microsoft, Oracle, Meta, and Alphabet to stand up data centers, they have to spend it downstream. Power, concrete, electricity, natural gas, solar. There's a lot of different layers to this. Now, it all comes full circle, and I think the way that we need to look at this as the amount of free cash flow that's going to be generated by the semiconductors versus the big five data center companies is inverse. They're going to generate a ton of free cash flow, and the combination for 2027, I don't think it'll be 2026, but for 2027 could be negative for Amazon, Alphabet, Microsoft, Meta, Oracle, and I don't think it matters. But at some point, you will have an inflection point where it comes full circle and the free cash flow from the components either flatten out or start to decline a little bit as the CapEx cycle starts to taper off. And I think that that's really the play ultimately, because the long-term winners are going to be the data center companies. It's just like pipelines. I cannot go raise capital and compete in pipelines. Too much red tape, regulatory, land, et cetera, et cetera. These data center companies have become too big to fail, and you just can't compete with them. So ultimately, I think they do very well in the short term. I think that the components have a runway, but I think it broadens out outside of NVIDIA. I think NVIDIA will move higher, but I think there's probably more alpha on Broadcom right now. But I think both are going to do well. Now, if any of you, well, I like the NeoClouds. I'm in Nebius and CoreWeave. I'm a big fan of them. We're going to get back to look at the stock market in a minute and talk about the OpenAI lawsuit. But keep in mind, from an alternative asset perspective, I told everybody to buy the 25-26 Topps basketball hobby boxes. They're up a lot. I have a prediction. Topps just regained the license for football. They are reintroducing their Topps flagship NFL release after reclaiming the league's license. It launches on August 21st. I believe this product will get bought up and it will go up in value. The reality is this is going to be a very highly sought after product. Rip and shippers are going to rip it into the ground. If you have any interest in alternative investments, my personal plan, I'm going to try to get a case of this if I can, and I'm just going to put it away. That's my own plan. All right, let's take a look. Little look, see where we are in the market, where we're making money, and CRM coming back from the pits of despair. 172, ladies and gentlemen. Cards trading never ends well. I think you're stuck in the 80s and 90s, and I think you should actually do some due diligence. Just saying. Anyway, Microsoft, Mr. Softy, 392. Reddit 200, ServiceNow 112. It's the return of the SaaS. Now, here's a problem. Crude's at 75. I do not like this. I hate the crudes at 75. I hate it. We'll see. We will see. Palantir losing 130. Amazon 247.95. I like it. Apple is moving. Apple 317. Lulu 120. Netflix 74.65. They must be riding high on Monopoly. Riding high on Monopoly. All right, Zeta 2221. I will get Nick on. Big fan of this company. I think they're going to do big things. Uber 75. ET over 20. Realty Income 63.75. We got to do some work on CrowdStrike, Fortinet. Actually, I want to let's throw Fortinet on here. I don't know why I'm not tracking it. Big fan of Fortinet. Oh my God. 161. Are you freaking kidding me? Incredible. Absolutely incredible. VG's running today. It's over 13. Look at Wix getting over 50. Canada. I don't even think he owns it. All right, let's get into some losers. The Googs falling a little bit. Rubrik, TKO Group falling. By the way, did I not call Gable Stevenson absolutely walking through that guy? Did I not call that? Just saying. I'm very disappointed that people think Connor was injured and that this was all sham. Connor threw a kick he shouldn't have thrown. He came down awkward on his right knee and it buckled. He came down awkward. That wasn't a circus stunt. I don't believe Connor was scared to fight. Connor's a 2-division champ. He did something stupid in the ring and got injured. All there is to it. There's no conspiracy theory. My opinion. Meta 660. Hoodie O Hood 110. QCOM 185. If Qualcomm keeps falling, we're going to get really, really, really interested. Really interested. Broadcom 388, I do not like that. SoFi is not being so fly today. 1820. We got to wait 2 weeks for earnings. AMD's falling a little bit. Strategy's falling a little bit. Crypto's getting hit. Oracle keeps falling. 134. Oh my God. Round tripping. No good. No good. CoreWeave 84. That's falling a lot today. All right. QXO. I think QXO has built out one of the most impressive building distribution companies there is. Unfortunately, for QXO to work, you need housing to pick up. You need rates to come down so people refinance. When people refinance, they typically do home renovations. When rates come down, people move. When people move, they buy houses and fix them up. You need rates to come down. It also unlocks capital so home builders can build more homes. QXO is a play on the future, not a play on today. So that's the short of it when it comes to QXO. And look, we also need Trump to sign legislation. So we'll go from there. But long term, I think QXO is very bullish. I'll write a new article about QXO. Marvell, 219. ARM Holdings, 298. Space Mob getting wrecked today. Rocket Lab at 76. ASTS at 67. I feel bad for the space mob. I have no idea what's going to happen going forward. SpaceX, 138. I mean, SpaceX, none of these companies look interesting to me. I'm not mincing words. These companies look like shit to me. They just do. But I'm also the wrong person to ask. This should have never happened. And I'll tell you this. What makes you think this isn't going to keep happening when more shares get unlocked? I don't know. I think SpaceX should be under 100 a share. My own opinion. And I'm a shareholder by proxy. So I'm not doing myself any favors by saying SpaceX should be under 100 a share. Okay? I just think that this is a crazy valuation for this company. Well, let's look at Rocket Lab. Let me blow your minds real quick, okay? And this is the problem I have with Rocket Lab. Not the company. The company does amazing things, okay? The company does amazing things. Let's RKLB. Okay, this is now a $44 billion company, okay? This is now a $44 billion company. Let's put this against SoFi. It's double the market cap of SoFi. Double the market cap. Yet the revenue is a fraction and they're not profitable. SoFi, EBITDA $892 million in the TTM. EBITDA for Rocket Lab, negative $176 million. Operating income, $646 million to negative $226 million. How on earth is Rocket Lab a bigger company than SoFi? Like, get out of here. It is just insane. And people want to talk about growth. I thought I was the one that didn't understand growth. I mean, RKLB, quarterly growth, okay? Quarterly revenue growth. Cool. Let's add SoFi in there. And you're telling me that Rocket Lab should be a bigger market cap than SoFi? What are we doing? What are we doing? Like, absolutely insane. I'm sorry, but Rocket Lab should not have gone to 150. It shouldn't be where it is. Like, when are we going to call a spade and say that we're actually going to look at fucking numbers? Crazy. Yet people don't want to buy Meta. People want to buy Rocket Lab, but they don't want to buy Meta. It's crazy. I don't know. And look, that's why I don't get into these things and I don't make a lot more money than I do, because I look at the numbers and I'm like, this doesn't make sense to me. Meta makes sense to me, especially if they're going to become the largest neocloud. That makes sense to me. Like, how are we going to say that a company don't want to export? We want chart. Where the hell's the chart? Oh, I got to click something for a chart. There we go. Oh, let's do quarterly. I'm sorry. You look at Meta's revenue. Their revenue grew 33% year over year in Q1. And since Q2 2026, it's grown at a 25% CAGR, or by 775%. Like, Meta is just a beast. It is a beast of a company, and people are selling it off. It is inexpensive. It is inexpensive. Yet, people, for some reason, were buying Tesla, which also didn't make sense. And I cannot wait for Tesla to report. Meta's finally a bigger company. Hallelujah. It's finally a bigger company. How long was it that Tesla was a bigger company than Meta? How long? And you look at the margins, it's not even close. It's not even close. You look at the revenue and profitability, it's not even close. Tesla should be nowhere near the valuation it is, or Meta should be a lot bigger of a valuation than it is. But once again, we need more buyers than sellers, and they're not stepping in. And it looks like NVIDIA is falling off again. Oh, NVIDIA can't make up its mind. It's down $6 right now. Can't make up its mind. And I think a lot of people are starting to get of that mindset that there's going to be more than one winner, and how much. I think the Apple deal was very telling. How much is Broadcom going to cut into NVIDIA? We don't know. We legitimately do not know. But NVIDIA reports in August, and they have to come out swinging. Their margins are incredible. And look, I'm not hating on Musk. I think Musk is one of the greatest, if not the greatest entrepreneur we've ever seen. I'm just saying the valuations of his companies are overvalued. There's a big difference between hating on Musk and thinking that his companies are overvalued. Two different things. Two completely different things. I think the market's trying to figure out what NVIDIA's forward numbers are going to look at if Broadcom is picking up all these contracts, because Apple just signed a multi-generational along with Meta. I think the Musk premium is stupid, but that's just my own opinion. I mean, the reality is one company actually makes a lot of money, the other one doesn't. And as an investor, I want cash flow. Just saying. Just saying. Now we should go to all right, so how long do they talk for? Hold on. All right, so they actually talked about Oracle. I want to hear what they say about good old Oracle. Is maybe they said something that I missed.
So I don't want to get your take on it first because you're sort of locked. You're locked for the moment. But Sarat, you own it, and I haven't heard from you on this name in a while. Why do you think this chart continues to look the way it does, and what leads you to believe that this story is going to look different anytime soon?
So when Oracle announced the big news a year ago, stock kind of jumped, went radically up. We sold about half our position. We kept on it because we still feel that Oracle can make the transition and have earnings power, but they're doing what the Fab 7X Apple are doing, is spending into the business. And the transition is going to occur really when they show that, but they don't get any credit for this at all. So we like it still at these levels. It's painful, but we're holding it.
So I agree with Sarat on the fundamental picture here in terms of why is the stock down over the last several sessions, including today. I think this has a lot to do with the monumental debt offerings that have been coming from the likes of Amazon and SpaceX. And if you think about SpaceX, whether that was 2 weeks ago, whenever it was that they did a $25 billion offering, the spreads on those offerings have been going wide, wide, wide. I think the yield to worst is over 7% on one of the longer dated issuances. And it's basically just the debt market is having a tough time digesting all this debt issuance, which includes Oracle, which has used a lot of debt financing on their data center build-outs.
Okay. Well, we have some breaking headlines from Fed Governor Chris Waller, Steve Leisman, our senior economics reporter.
Look, I think that Oracle is in a very exciting place right now, But look, there's going to be a lot of pain. It's going to take a long time. And not everybody wants to sit in it for 2 or 3 years. I do. I relish in it because I have time on my side. And that's the long-term game with investing. And I'm going to bring it back to something that a lot of people would not invest in, okay? Target. A lot of people probably wouldn't invest in Target, okay? But if you look at where Target is right now, I was bottom fishing at 98 or so on Target, or 102 somewhere there. Look at that rebound off the bottom. Target was yielding 4 to 5%. I mean, absolutely incredible. And you know what? It comes down to numbers. And there's always deals in the market that the market is mispricing. Let me bring this up. You know, and not everything has to be technology. And I was wrong on Target for a little bit. Okay. No, it from the first article I wrote, it's still down a little bit, but it got cheaper and cheaper, and I started buying right under $100. I mean, Oracle has rebounded, and you're getting paid a big dividend, or you were getting paid a big dividend. It's a dividend king. It's on sale. It may still be on sale. Yet, people are throwing it out for the wrong reasons. I should look at what my target cost basis is. And, you know, it's a good company. But there's areas outside technology that we can take advantage of. One of them, I think people are going to miss an opportunity in Starbucks also. I think the India deal is going to be huge. I think they're going to continue to expand. They're actually getting rid of Microsoft and IBM to build their own data system. Starbucks is something a lot of people probably wouldn't invest in. I like it. Target is going down just like Kmart did. Okay. Can you give me some reasons why? Is there any data to back that up? I'm just wondering. Is there any data to back that up? I have no idea who's going to succeed Ellison. I have no idea. No, I have not been able to test Muse Spark. Unfortunately, I have not had time. I haven't even had time to do OpenAI. I was actually looking at it, and I just have not had time yet. Yeah, I'm not saying that Target's a better investment than the component stuff. I'm just saying that there are other places that you can invest. That's all I'm saying. Steve is so biased on numbers only. THR, don't know what that means. Likes of NVIDIA, Microsoft, and Apple. We're at one time per profit companies. Look at them now. I don't even understand that comment. Priya, can you elaborate, please? I actually want to have a conversation about this. I don't understand the comment. Because if we're saying that, look at Microsoft now, yeah, it's in a bear market. But you know what? Their cash flow continues to go up. They're in a bear market because people are selling it because of how much they're spending on CapEx. That will change. That will change. Now, I want to see what the breaking news was on CNBC. I have a feeling Waller spoke. What you guys are saying.
Pretty hawkish concept here from Fed Governor Chris Waller. He said The Fed has to be ready to tighten monetary policy to avoid mistakes of 2021-22. With inflation above target, he says, the labor market stable and near full employment, quote, any serious policy rule calls for raising the policy rate, because the FOMC will need to consider tightening monetary policy in the near term if the CPI this week is hot, and he's concerned about the elevated pace of core inflation, questions whether the Fed should even look through these one-time price increases from energy and from tariffs. Says we're past the point where we can attribute large price increases to earlier tariff hikes. If the upward inflation trend continues, it'll be hard to push inflation back to 2% with the policy at its current rate. Increases in core, quote, are quite broad, and he points out that nearly 70% of core service categories are up more than 3%. There is another side to his talk here, Scott, where he says there's still a credible case for inflation to decline to target at the current policy rate, and there's a greater risk now that tighter policy could drive up unemployment and risk recession. But he also says it's an equally plausible case of the need for tighter monetary policy. And I'll just leave you here, Scott, with one quote, which I have here from this speech. It's very, very hawkish speech, where he says, and I'll just find that for you in a second here. They have it in the back. Where is it? There it is. No matter how you cut it or what measure you want to use, inflation is up this year, even accounting for the likely temporary direct effects of the oil price shock. It's running at levels inconsistent with the FOMC's 2% objective. So there's a very important governor being very hawkish and talking about raising rates for you, Scott. And I'll just go ahead. Sorry.
And I was going to say, and not necessarily a surprise, given where his point of view has seemingly moved over the last many months. Like, he was in favor of getting rid of the easing bias in the most recent statement. Yeah. So this is sort of doubling down on what the market had already assumed was a more hawkish view by Mr. Waller.
I think doubling down and taking it another step, if you will, Scott. I mean, this is a very explicit warning about the potential need to raise rates. And I will tell you that I guess it was last week sometime where about a 63% probability of September rate hike. Now it's 77, but maybe more interestingly now, July is up to 47%. So that's on the table right now. So there's the first cut and the second cut being priced in for December as well. So the market definitely taking a message from this. I think I saw yields on the 2 and the 10-year both inch a bit higher as well, and maybe another leg down a little bit in the stock market on this.
Yeah, I mean, the 10 was at 461. All of this, of course, the backdrop of Fed Chair Warsh on the Hill this week, right?
And I ask myself this question, Scott: was this speech run by Fed Chairman Warsh, and did Kevin say, "Go ahead, Chris, do this. I want you to do this," or was it him saying, you know, what we don't know is who the intellectual pulling guard is for this new chairman, right? Sometimes it was the vice chairman.
Okay. This is what I'm going to say. I'm sick and tired of this bullshit. We need to stop with this arbitrary number of 2%. Need to stop. Need to stop with an arbitrary number of 2%. We need to start looking at real-time data. And we need to think about the ramifications. Look, if they really think about this, okay? This is how dumb this is. And I really think a lot of these people are stuck in a 1970s economy, 1980s economy. If you raise rates by 50 bips or 75 bips or 100 bips, okay? What are you doing? You're not going to stop anybody from buying regular goods. What you're going to stop is people buying things that you have to put on loan. You're going to stop people buying automobiles. You're going to make it where the housing market slows down even further. You're not stopping anybody from going and buying Starbucks or groceries or anything. What you're going to do is you are going to make it where regular Americans have an even harder time to feed their families and pay their bills, because now their carrying costs on debt go up. These people live in a fantasy world. These people live in a world that they seem to not understand, or they seem to forget that the average American carries credit card debt. And when you raise rates, you make that monthly payment even more of interest. So paying down the principal gets harder and harder. Raising rates is not going to have the effect that they want it to have. It's going to hurt Americans. It is going to hurt Americans. This is bad. I don't care about the stock market with this statement. Look, I can sit here and I can withstand the stock market going down for a little bit. That's not what this is about. This is about actually sound Fed policy. We live in a free market society, and we should not worry about moving here and there. If there is more demand than supply, companies will increase supply because they can make money doing it. And you know what? If companies are unwilling to increase supply, you will have new companies come in. Raising rates will destroy the job market. Raising rates will increase the carrying cost of debt. This is absolutely insane. Absolutely insane. I get so angry at this because you know what? If inflation is 2.5% or 3.5%, it doesn't matter. It's not stopping anybody from spending money. Like, they need to get off this 2% target. It's absolutely crazy. And you know what? The way that they look at CPI is ass backwards. They're looking at a snapshot of the economy from 6 to 8 weeks ago, done by surveys, and the housing data can be up to a year old. That's why Trueflation has been a different number. That's why I built my site, nowflation.com. And look, my site is projecting that the number tomorrow is 3.89%. I'm actually above Kalshi and I'm above the street. I'm right under the Cleveland Fed. And I can show it right here. Now, this gauge is significantly different than my nowflation gauge. Based on how the Fed looks at or how the CPI rate is calculated, I'm at 3.89%. And raising rates is not going to lower gas prices. It's not going to lower gas prices. You know what's going to lower gas prices? Actually getting more gas on the market, actually getting more oil on the market. You need more barrels flowing to the market to drive down the price of oil. Oil goes down, gasoline goes down. Rates have nothing to do with it. Oh, you think that by increasing rates, people aren't going to go fill up their tank? I got news for you. If filling up your tank goes up by $1, nobody's not filling up their tank. Rates have nothing to do with that. Has nothing to do with that. It is all supply and demand. We live in a free market society. The Fed needs to stop fucking around and let the free markets work themselves out. They should only raise or decrease rates in dire straits. Have rates stay at 2.5% and don't move them unless absolutely necessary. This whole thing is crazy. So annoying. So annoying. Sometimes I really think that they have lost touch with reality. I really do believe that. And I'm not saying I'm smarter than these guys. I'm just saying that it feels like common sense has been thrown out the door. It really feels like that. It really feels like common sense has been thrown out the door now. That these guys forget what it was like to struggle and forget what it was like to not make the type of money that they make or not have the type of money that they have. I think that they have a lost sense of reality. But you know what? if they start raising rates, you're going to want to be in defensive companies that are paying a high dividend, and tech's going to get screwed. Get ready. They start raising rates, we're going to see a nasty, nasty decline in the markets. It won't stop me from supporting Starbucks, though. I can tell you that right now. I think Warsh, I happen to like Warsh. I don't think that he's on this whole bandwagon. So we'll see. Anyway, enough with that. Enough with me bitching and complaining about that. We got crude, which is flying right now. Oh, this is ugly. Oh, this is ugly. Crude is absolutely flying. 75.66. I want to pull my hair out. Ah, no bueno. This is absolutely no bueno. And you know what? Because of what the Fed is doing, I think we need to watch this. Hold on. Because Mohammed El-Erian was talking about how the bond market can fund the markets without higher yields. So let's see what he has to say.
Larian, he is here, Ward Professor, Chief Economic Advisor at Allianz, longtime friend of Squawk Box. Good morning to you. The ceasefire is not much of a ceasefire at all. And I don't know where you think or how you think that should or should not be impacting markets. You're looking at oil up a bit, but actually not a shocking amount. And while equities are off a bit, again, not a shocking amount, at least as it relates to the Middle East. We could talk about AI and the AI trade, but what do you see driving all this?
So it is having some spillover effect, but they're very contained. I think there's two reasons for this. One is the markets deeply believe that these skirmishes are going to just remain skirmishes. It's not going to evolve into outright conflict yet again. It's not going to evolve into a long-term closure of the strait. And then the second issue is there's so much else to focus on. And most of what else you have to focus on is positive. So you put these two things together and the market says, okay, I am going to reflect this in Brent going to high 70s, but I'm not going to take it to high 80s or 90s, which is where it would be if you believe that this is going to be much bigger than what it is.
Do you think that's the right call?
I do. I think it will be contained. I think neither side want to go back to a full conflict, but both sides want to make their point for domestic reasons.
You said there's a lot of other good reasons to overlook what's happening in the Middle East. What's that? What's on your list?
So this is going to be a huge week. We get the inflation data. We get Governor Walsh going up to Congress. We get the retail sales data. And all this within major transformations going on. So what am I looking for? I'm looking for this set of inflation numbers to say the peak of the inflation cycle, retail sales to stay pretty strong, and continuing to see this fundamental transition to a more modern, forward-looking, reform-oriented Federal Reserve that's dragging the rest of central banking with it.
Let me throw one other piece into our little pot. It's an interesting piece in the Wall Street Journal this morning about the bond market, and specifically some of the bonds that are being sold, frankly, by the SpaceX's, NVIDIA's, and others of the world, and just how much appetite or lack of appetite there really is for what is clearly the single industry that it seems to be driving all of this.
So if you look at my post in X, if you look at an article I did for the Financial Times a month ago, if you do a very simple sources and uses of funds, what we used to do all the time in the old days, there is no way this bond market can fund all that the tech platforms need, all that the governments need, and all that the other corporate needs without higher yields. It just doesn't add up.
Okay.
And you saw that in Amazon. You saw two things happen in Amazon. One is people had to sell something else to buy Amazon. And despite that, Amazon had a lackluster performance last week.
in terms of its new bond issuance.
Okay, so if that's true, what does that mean for equity prices?
So equity prices, of course, you never want to see higher yields for equity prices, but that's not what's driving equity prices right now. What's driving equity prices is this belief that when you look at the transformations ahead, the US will continuously outperform the rest of the world. And I think that is a correct assessment. Now, how much will they outperform in absolute sense as opposed to relative sense? That's harder to tell, but I have no doubt they're going to outperform in relative sense.
The only,
Go
ahead.
ahead. Just to
Yeah, that's what I wanted to
the bond implication, the same
Yeah.
thing, right? Like that's telling us what? That investors want to get paid more if they're going to fund this, or there's just not enough money to go around.
So there's always enough money to go around. It depends on
It's
what
gotta pick its
price.
places.
Yeah,
right.
what price. So it's going to be taken from elsewhere. And what you're seeing is being taken from other exposures, other bond exposures right now. The hope is that you manage to attract more money from the rest of the world. But as we discussed in a previous discussion, if you look at the traditional sources of funding for tech in particular, which is the Middle East, they will not be as forthcoming as they've been in the past. They've got a lot of local demands for funds right now.
Because of the war that's happening right now?
Correct, because massive reconstruction, and also like everybody else, they realize that they need more resilience. So you're seeing more pipelines being built, you're seeing a lot more resilience being built in the system, and like any corporate CEO will tell you, resilience is necessary but expensive.
That's not a commentary on Amazon or what it's doing with AI or their belief in AI. It's just that was a big slushing pot of money that was floating around looking for a place to go. And then they realized, wait a second, we got to put it here to work at home for other things.
Correct. I mean, I am a big, big believer in the transformational ability of AI. I'm also a big believer that's going to cost a lot of money. So if you look, the sources of funding is a little bit less. The uses of funds is a lot more. And the only way you get this to equal without a recession or anything awful is higher yields.
But I think the thing that I'm trying to think about is if, in fact, there's not enough money to go around, but there's going to require a lot more cost to all of these companies, that should be reflected in the stock prices, no?
So it is. I mean, if you look, we no longer have the straight up thing that we've had. I think people are now realizing two things. One is it's more expensive than we thought. And two, not everybody's going to win. So the venture capitalist mindset is starting to set in. And that's why you see a bit more caution in terms of investors. And I think that's a good thing.
Do you think we're at a fair price now? Do you think that there's a big opportunity to move up? I mean, part of it is the reason why I'm thinking about the move up or continued move up is I think Kevin Warsh needs a move up to actually do some of the things that he wants to do.
Like?
Well, it depends what you think he wants to do with rates.
No, so I think there's two issues. The economic payoff in terms of productivity is going to be significant. What you don't know is how many of these companies are going to ultimately succeed, because this is a arms race in terms of investments. So if you ask me, on average, is the market fairly priced? I say yes. Individual names, then I'll say to you, who's going to win? Who's going to win this race? Because whoever wins this race, the payoffs are going to be enormous, and then investors in the others are going to discover venture capital reality, which is one or two may win, but the rest are going to be less so.
Well, I don't know that he really confirmed anything, to be honest with you. I don't think he really confirmed anything. And I don't know if we need to think about this as a venture capitalist mindset. I do think the U.S. is positioned the best in the world. And, oh my God, you guys make me fucking laugh. This guy in the Dean evaluation should date. Oh my God. Oh, you guys crack me up. Oh, hilarious, hilarious, hilarious. What's going on with PayPal? I actually stopped following it. Is something going on with PayPal? 48. PayPal guys signed a neutral rating at Piper Sandler. I think PayPal is undervalued. I just don't think anybody cares. I like PayPal. I think it's undervalued. I just, it's hard for me to, oh my God. While I was live, I missed something. Oh my God. Google is attempting to sell its TPUs to up and coming neoclouds, entering an arena NVIDIA dominated. Holy shit. Holy shit. And this goes back to what I was talking about. This is, look, NVIDIA, I have a lot of money in there. For how much money I have, it's a large position in my portfolio. So to me, it's a lot of money. To some, it may not be a lot of money. To others, it may be too much. I don't know. But this is what I was saying. I don't know that NVIDIA is going to be looked at as the king of all kings in 5 years from now. Yes, they're going to make money. Yes, they're going to keep growing. But how much capital is going to be siphoned away from them? And now if Alphabet is selling off its TPUs, what happens if Amazon starts selling off its TPUs? What happens? I don't know what happens with NVIDIA. Why would you own NVIDIA for it to go to 5 trillion to 10 trillion? Look, I think it's undervalued here, but you know what? I think NVIDIA's time's going to run out, and I think they only have a year and a half or 2 years of like real dominance. And then I think that we're going to be in a situation where it completely bronze out. And we'll see. At some point, it has to broaden out. I think this is just more news about doing it. We know that Apple signed a multi-generational deal with Broadcom. Same with Meta, same with OpenAI. Broadcom is a incredible play in my mind. I happen to still like NVIDIA a lot, but I think at some point it's going to broaden out. And I don't know when that is. I certainly can't predict when that is. But you know what? All roads lead back to Taiwan Semi. All roads lead back to Taiwan Semi. Steve, you're missing one big thing here is the data centers, HPCs are needed for powering AI. And the big three, Iran, Nebius, CoreWeave, are all under the NVIDIA umbrella. I think NVIDIA does well. I'm just saying that it's going to broaden out past NVIDIA. And I think that everybody thinking NVIDIA should be a $400 or $500 stock is just not realistic. And I still stand by. I don't know that NVIDIA gets past 250 this year. I don't know. We'll see. Tomorrow is going to be a big day for CPI coming out, especially with what Waller just said. And now we got explosions in SR. King Khalid Air Base in SR has been targeted with missiles. Eyewitnesses report. Hold on. The reports indicate that columns of smoke are rising from Abha International Airport in Saudi Arabia. Houthis reportedly launched at least 6 missiles towards Saudi Arabia. That is not good. This shit's going to escalate again. And you're right, TPUs can't do the same thing. The problem is that these companies are re-architecturing their workloads to be more efficient on TPUs. So we'll see what happens. All right, let's take a look at where we are, ladies and gentlemen. Oil is trying to go over 76. Not what we want to see. Apple 316, just like Austin. AMD 538, Amazon 248. Salesforce hanging out 172. I'll take it. CoreWeave 84, no bueno. Cisco's back up to 119. Man, Fortinet, holy shit. 161. I cannot believe it. Cannot believe it. What a great company. I've been talking about Fortinet for a while. All right, Hood just lost 110. Meta 660. Microsoft 392. Netflix 74. All right. ServiceNow 112. NVIDIA 204.47. Taiwan Semi is going to be the one that we got to watch, ladies and gentlemen. Thursday, we got to watch it. They're going to tell us most likely how much they're going to be spending in CapEx going forward. And that will signal, to me at least, validation about everybody else spending money. Because if Taiwan Semi spends more money, they have the best insights into what is happening. Oracle 134, Palantir 130, Qualcomm 184, Reddit 202. We got SoFi still over 18, TKO Group 182, Venture Global, congratulations everybody, 1332. And then there was Zeta 2218. We'll take it. We will take it. I like Intuitive Surgical. I need to do more work on it, but I do like Intuitive Surgical. Addicted to trading. I love it. Hood sucks. And yes, I have a few shares. I love it. Is Zeta a 10 bagger? I have no idea. Is it going to go up? I am positioned as if it is going to go up. I mean, I don't know if I can agree with this. Dividend's not that big. It's less than 1%. And Taiwan Semi's up 242% in the past 5 years. So I don't know that I can agree with that. Oh, Trump, you need to figure this out. Should have never gotten us in there. This is just not good. I have a very bad feeling about oil right now. I have a very bad feeling. Addicted to trading, buying some DocuSign. I haven't looked at DocuSign in a while. I should take a look at it. All right, let's move. I didn't get to talk about this yet. I want to discuss my thoughts on this, so let's hear what they're saying. Maybe I get a fresh perspective, and then I will give you my thoughts.
It really is a remarkable 180. In 2024, Sam Altman was at Apple Park as CEO Tim Cook unveiled ChatGPT as its marquee AI partner. And then this year, no Altman, no mention of OpenAI, and Google's Gemini was front and center. Now, in terms of how we got here, one, OpenAI went from software partner to hardware rival, buying the device startup co-founded by the lead defendant in this case, Tang Tan, and Johnny Ive, the designer behind the original iPhone. Then two, OpenAI recruited aggressively from Apple. 400 plus former employees now work there, including what Apple calls scores of engineers in the startup's hardware unit. Worth noting, Tan once reported to incoming Apple CEO John Ternus back when he was leading hardware. Now Tan's building a potential iPhone rival with hundreds of Apple veterans, just as Ternus gets ready to take over as Apple CEO. And that brings us to the allegations at the heart of this lawsuit. Apple says that Tan used job interviews to press employees for confidential details, including prototypes and internal files. The suit also accuses a former iPhone engineer of downloading designs after joining OpenAI. So what Apple wants now is an injunction that could halt any OpenAI hardware work tied to allegedly stolen technology. Apple also seeking a jury trial. And as we saw in Elon Musk's case against OpenAI, discovery can expose far more than the original dispute, including internal emails, recruiting records, and potentially sensitive IP like hardware mockups. Kel?
Look, I mean, the details are pretty damning, if I can use the word. And now it has also ignited yet another back and forth between Sam Altman and Elon Musk.
Right. And I mean, one of the jabs between Elon Musk and Sam Altman was him saying that, oh, we'll see if you can get time away from your probation officer. And this is very much still civil court. We're not talking about criminal court. And if we look at that case between Musk and OpenAI, it was actually 9 months that passed between Musk suing OpenAI and the start of the jury trial. But what I will say that is different here is that Apple is a well-oiled machine with these cases. And what they're looking for immediately, so something that could front-run any sort of jury trial, is injunctive relief. That is similar to what we saw with Anthropic versus the DOJ. Anthropic looking to stay that supply chain risk designation. They were successful here in a court in Northern California. The magistrate judge that's overseeing this is Virginia DeMarquis. She's a former Silicon Valley litigator who joined the bench 8 years ago, has a reputation for keeping discovery disciplined. I'd be very interested to see whether or not she sides with Apple in this case.
But in other words, there's a pretty significant chance that that Apple suing OpenAI for stealing all this information, that ends up in court.
At the very least, we could see them win out on this injunction that they are requesting. So basically putting a hard stop to OpenAI's hardware ambitions, which was a $6.5 billion investment made last year when they acquired the company that Johnny Ive co-founded. And so at the very least, they could put pause on that. And so that would certainly stop them in their tracks with any sort of hardware ambitions. And then, I mean, you have a question of when can we actually see a jury trial in this? If the Elon Musk case is any sort of prototype for what we might see, we're talking about 9 months up to a year.
Fascinating. All right, Mackenzie, thanks. Appreciate it. Mackenzie Sigalos. Our next guest says this lawsuit feels like a years-long distraction that Apple could easily bear, but OpenAI can't. For more, let's...
All right, I do want to hear this. I got a lot of thoughts about this. A lot of thoughts. And Elon's becoming a comedian, which is pretty funny.
Bring in Nilay Patel. He's editor-in-chief of The Verge. Nilay, it's great to see you. It's been a while. So talk us, how are you thinking about this? I mean, look, the facts of the case seem pretty black and white. It looks like OpenAI hired these folks from Apple who then trained potential interviewees on how to take secrets from Apple devices and all the rest of it, then pose as Apple employees to go figure out how to, get information about their hardware. So it doesn't look great for them, at least on paper.
Yeah. First, I just want to commend Apple for writing a complaint that is designed for regular people to read it and feel nothing but extreme sympathy for Apple in this situation. We have to read OpenAI's reply and its responses. I'm sure they're going to do a good job of painting their side of the story persuasively as well. The main thing for me is that OpenAI issues a new memo calling a code red and a return to focus every 4 weeks on the clock, right? There's always executive turnover there. They're always trying to pivot their business model. They did not really succeed at competing with Google, which was their ambition from the start. Now they're trying to compete with everything and everyone all the time. Apple does not have this problem. No matter how you feel about Apple's AI ambitions, about its false start with Siri, powered with OpenAI technology a couple of years ago, they're apparently back on track. And even their big distractions, their $10 billion distraction trying to build a car, did not actually distract them. So I think Apple gets to stay on the case, building new and better iPhones. They get to have a well-managed CEO transition. OpenAI has a whole bunch of executives, including maybe their most famous executive, Johnny Ive, distracted with a court case and having their options limited in terms of what they can do and how they can talk to suppliers, because all of that will come out in discovery. I think this is actually a huge threat for OpenAI.
Sure. I mean, honestly, it does look that way. And we've talked a lot about that on the show. We've had Sebastian Mallaby on, who's made some points about their business model and the disadvantages they're at versus others. He said, look, they're squeezed out. They have Anthropic, who's kind of eating their lunch on the enterprise side. And then they have Gemini, which is kind of eating their lunch on the consumer side. So yeah, if they could come up with this killer device, that would be a huge deal. Although even that, we should say, it's an unproven category at this point.
Yeah, there are simply no compelling AI-first hardware devices that I have seen or any of my colleagues at The Verge have reviewed. And OpenAI's promise is that the AI will be able to do things agentically for you that would take over every app on your phone. The problem with that, just from the base level, is that your phone has Instagram and TikTok on it, and people like looking at those things on screens. Once you have a screen, you have inevitably built another smartphone, and then you're taking on the iPhone.
Yeah.
This is just the problem with the category, and no one has really overcome it. Maybe Johnny and I have had some grand plan to overcome it. We've heard those plans come and go.
It's a great point. I was just going to add that one of the reasons why people might want this screen-free device is to get to help break their addiction. Neil, I was just going to ask as well, the timeline of all this comes, as Mackenzie outlined, if this does go to some kind of courtroom jury trial, let's say that does take 9 months. I mean, that is exactly when we're talking about an OpenAI IPO. Now that they've kind of acknowledged maybe it's into next year, talk about an unwelcome distraction.
Yeah, it's a huge distraction. I would also add more broadly, the AI industry as it is currently constituted is built on widespread unauthorized taking of information. By last count, I think there's over 100 IP lawsuits filed against AI companies in a variety of ways. Reddit is suing Anthropic. The New York Times is suing OpenAI. Penske Media Company is suing Google. There's just a lot of this in the ether. Consumers know that the AI companies have taken a lot of work. Artists and musicians and publishers know that there's been a lot of work taking. Any of those lawsuits, if they get to a conclusion that requires licensing or requires the models to be retrained because they were trained in unauthorized ways, that is a massive explosion in costs for the entire industry. And I think it's a risk that we all kind of have to ignore every day because it's just there and it's looming, but there's nothing to be done except watch these companies push ever harder.
I'm so glad
All right, so here's my thoughts. We're going to have to see how much information comes out. I would not want to go against Apple in a courtroom with this. I just wouldn't. Apple's got the money to fight them. This could hurt OpenAI's IPO without a question. Without a question, this could absolutely hurt OpenAI's IPO. If they are found, and I am no legal expert, but if they are found to have stolen trade secrets from Apple, holy shit. Holy shit. That could be the case. And we've heard rumors about this happening before. Man, that could be a windfall of pain for OpenAI. That would not be good. My guess, they're going to settle out of court something. They're going to make some deal with Apple. That is just my personal feeling. Oh, man. Absolutely wild, ladies and gentlemen. Absolutely wild. All right. It's getting ugly out there. I wish OpenAI was a public company right now so we could see what's happening with the stock price, but we can't. I think Apple is going to suit up and get ready. I don't think that they're just doing this for the hell of it. I think there's real fire there, and we'll see. We will see. So we got the return of the SAS today. We got oil scrambling higher. Biggest winners today, Venture Global, oil, Salesforce, ServiceNow, Reddit, Zeta. Hollis, we're going to start Monopoly Group. Fortinet, 161. Palantir, 129. Microsoft, Mr. Softy, 392. Amazon, 248. Uber, 75. A lot of stuff going on here. Apple's still in the green. We like it. Who are the biggest losers? Memory, Space, SanDisk, 1688. Space Mob, 67. Marvell, 217. ARM, 298. Rocket Lab, 76. CoreWeave, 8360. Micron, 929. Let's see what happens. Lots going to change this week. Taiwan Semi is going to give us the news. We got banks tomorrow. We got CPI tomorrow. That's where we're at. I'm going to get going. It's time for lunch. It's 1:30. Thank you, everybody, for being here. We have 2 more streams today. I will be back at 6:30 with the stock market rewind. I'm going to do some research on CPI, come out with a final projection, digest what happened in the market today, and then Chris and I will be back tonight at 9 o'clock for Inside the Numbers, back to our normal nights. Do me a favor. If you like the stream, please subscribe to the channel and hit the like button. It actually helps me out a lot, costs you nothing. Thank you very much, everybody, for being here. I really appreciate it. Chels, Hollis, Lena, Addicted to Trading, Gonzo, Rusty, PB. Thank you, everybody. Really appreciate it. I will be back at 6 o'clock, 6 or 6:30. I'll be back, and then Chris and I at 9 o'clock for Inside the Numbers, and we'll go from there. Take care, everyone. See you in a little bit. Thank you very much.